tech stocks in India are crashing. In this tech meltdown, unicorns like Zomato, Paytm, they are taking the biggest hit. But the story is not different with the giants like TCS, Wipro or Infosys. If we take up the Q4 results of Infosys, the profit growth is by 7.8% on year-to-year basis, and the sales growth is around 16%. When compared with the Q4 results of last year, 15%, it is better, but the expectation was around 20%. And FY 23-24 guidance also reveals that the growth will be around 6 to 8% and the margin will be around 21 to 23%. And when the company misses estimates on multiple fronts, the derating of the stock starts, which is happening in the case of Infosys. If we analyze the Q4 results of another tech giant, TCS, which has met the expectation on revenue and profit estimate but missed margin by very little percentage. For example, EBIT margin was expected to be around 25% and it was 24.4%. But if you analyze the verticals, there is some changes in it. The revenue growth, which is coming from BFSI, that is banking, financial sector and insurance, this segment had given 9% growth and it was 11% in December, which was supposed to be the weakest quarter. So there is something happening in that segment. So what are the reasons behind it? Where exactly is the root cause? Is it going to get better or worst? See, there is difference between risk and threat. Is it about just risk pertaining to the margin or the revenue, or there are certain threats which are going to threaten the survival of these companies? Let's analyze all these things in this video. There are two main reasons which are responsible for these changes which we are witnessing in tech sector. First one is exponential growth witnessed by IT sector during COVID. Second one is recession fear. Talking about the first point, during COVID, IT had become a necessity, something which is so inevitable, indispensable. One had to spend on IT, without which world could not function during COVID. So this had given boost to the revenue of these companies. And because 80-90% of the population, they were working from home, there were significant cost saving also. It is witnessed by around 26% of high margin these tech giants have given in FY 21. Now we have to ask one question to ourselves, that is it really right on us to expect this kind of exponential high growth going forward because COVID is over? Is it really possible to sustain this kind of growth? After the collapse of Credit Suisse in Europe and Silicon Valley Bank, people started watching this sector very closely, holding their breath because nobody knows how much pain is left out in the sector and where this sector is heading. And for Indian tech companies, main revenue sources from this segment itself, BFSI, that is banking, financial service and insurance. And the companies in this sector, they are on survival mode. They are not thinking about any implementation of the project, but first they are thinking how to survive, how to keep, liquidity and capital adequacy on track so that they are able to buy some time and survive and let this phase pass, right? So in this situation where there is high level of uncertainty, how can we expect steady or predictable revenue growth? In 2022, when Fed started interest rate hikes quite aggressively in order to tame inflation, companies started feeling the pinch of it because they could not access the capital, they faced the situation of cash crunch. Usually, if there is a pain in North America and Europe, it has a direct impact on Indian IT because as per CRISIL, 86% of the revenue for Indian IT sector, it is contributed by US and Europe itself. That's why Nifty IT has fallen by 27% in 2022. NASSCOM says that even the revenue will slow down for IT sector in FY23 and it will move at the rate of 6 to 8% in FY23, and now compare it against 15.5% growth this IT sector has witnessed in FY22. There are two kinds of stocks. One is growth stock, another is consumption stock. Growth means any kind of structural changes, even sentiment is enough to affect them. Their forward P that stands getting adjusted whenever there is a macro change or negative sentiment in the market. IT is actually falling into this category. Second is consumption stocks. So whether economy is booming or it is in recession mode, people will continue to consume certain things. So that will not impact them so much. But since IT is falling in the first category, that is growth, there are certain changes which the sector is witnessing. Everything is not so negative. So there is a silver lining also. Look at this chart. This red line is of Nifty IT and the other one is Nifty 50. How this is moving from 2003 till the date. So even after the market has crashed in 2008 financial crisis, what has recovered swiftly is this red line, right? So this has been the massive wealth creator. What does it mean? It means when the market is in recovery mode, it is only IT sector which will bounce back much aggressively and it creates massive wealth for investors. Now the next question is it right time to invest? That we don't know because nobody can ever time the market. But is it right theme to invest? This is the right question to ask ourselves. The answer is, they say there are only two kind of companies which you will see in the future. One is tech, another one is tech enabled. That means technology itself is evolving as a consumption theme. So technology is our new consumption. It is so inevitable even for an economy, even for an individual. As of now, there is high correlation between US-Europe GDP and Indian tech sector. That's why whenever those markets starts bleeding, we are experiencing some kind of turmoil. But going forward, will it be the same case? No, there will be a lot of emerging markets, be it Latin America or even India, where digitization speed is just increasing every day. So in short, it is always about diversification of the market also, right? There is one more interesting point here. Whenever there is mild recession, usually there will be spending cuts, budget cuts and decision delays, project cancellations. So that will impact IT sector. But now think, if the recession materializes, what will happen? Indian IT sector gains. How? Because their billing is in US dollar and the currency starts depreciating and again they will gain even during recession. The next question which is there in the mind of many investors, which is pertinent also, is can Indian IT sector thrive and survive during the age of AI or artificial intelligence? Because the next decade we are going to see a lot of changes which are enabled by artificial intelligence, augmented reality, virtual reality, machine learning, cloud services, etc. So the question is, do we have those kind of skilled professionals who can actually provide this kind of services, or IT sector itself can thrive and capture this opportunity? Let me tell you, as per Statista, in 2020 alone, there are more than 1,400 patents which are filed in AI from India itself. If you see, nowadays there are a lot of startups and there is a whole ecosystem itself in India which provide AI related products. And in recent budget 2023, Finance Minister Nirmala Sitharaman has announced that government is going to set up 3 Center for Excellence on AI, artificial intelligence, where academia and industry both will put their effort together in order to build talent pool of skilled AI professionals and find solutions in various fields such as healthcare or mobility or sustainability, etc. So when the government has vision and commitment, is ready to provide infrastructure and the required capital for this, what stops any country from progressing? Company or individuals, they all have ups and downs. It's not always stagnant. See, even in case of companies, there are going to be volatile, turbulent times. Some quarters, some years are going to be really bad. Management will have sleepless days. There will be brokerage firms outside which will derate the stock. Investors will be angry. Everyone will demand the answer. And the management will be trying hard to reimagine, rethink and steer the direction of the company in these turbulent times. So what matters at the end? How they started, what kind of challenges they have faced, could they actually withstand the onslaught of those conditions in their journey, and where they are presently today. Take the example of Infosys. It started with $250, right? And today the market capitalization is around $61.8 billion. So it has taken a lot of effort and it has gone through those ups and downs cycles in this journey. At the end, it is always about the ability of the leadership team of those companies, how they can reimagine the future of that company and how they are taking the right steps to stay relevant at that time. That's it. If they have the answer, then as an investor, we have to give a little bit of time and stay with the management till the volatility is past. Now tell me, when IT is embedded in every aspect of our life and economy, don't you think that it's a good point of entry for a long-term investor?